So China's real estate market is the largest asset class in the entire world. It's over $90 trillion in size. And in the last month, it just crashed by 9% in 30 days, which is an $8.1 trillion wipeout, okay? This represents an $11.25 billion flowing out of China's real estate market every single hour. So let's put this crash into a little bit more context and let's look at this chart right here. We can see today that China's real estate market is more than double the size of America's real estate market, but I want to point your attention towards 2008. What happened in 2008 when America's real estate market started to crash? Well, it caused a systematic global financial crisis. And look at the size of America's real estate market in 2008. It was less than $20 trillion in size. China's real estate market just lost $8 trillion in the past 30 days. So let's start talking about, are we going to see a global financial crisis 2.0 today? And what does this mean for Bitcoin? Yes, if global markets are affected, this could affect Bitcoin, but I believe China's crashing real estate market could help to explain some of the very interesting and strange things we are seeing in the Bitcoin space related to China, especially considering last month, the same month that their real estate market crashed, China actually reversed their Bitcoin backflip and said, yeah, you know what? In China, Bitcoin and quote unquote crypto is regarded as legal property, okay? So we're gonna get to all of the Bitcoin stuff a little bit later on at the end of today's video, but let's start breaking down the crisis happening in China. So this real estate crisis in China is massive for a number of reasons. The first being that China stores 70% of all of its wealth in real estate, okay? That means you got 1.4 billion people and 70% of all their wealth tied up in one asset class, and that is real estate. This is why you can see that China's real estate market actually accounts for around 25 to 30% of China's total GDP. Again, that's massive. And this is more than twice the amount of America's GDP that is actually dependent upon their real estate sector. Now, this is all fine. This is all okay when the price of homes is going up and to the right. But what happens when you have a small crash or prices actually begin declining? Or even worse, what happens when people start protesting and stop paying their mortgages because the real estate developers aren't even finishing their projects? Well, guess what? That's exactly what's happening in China today. We can see that there are protesters all around China. They're refusing to pay their mortgages because the property developers are just not finishing their properties. But China actually has a far larger problem, okay? They have overbuilt these enormous ghost cities all around the country, expecting their population to continue to grow and expecting those homes to actually be bought. But guess what? China's population is actually declining. They are actually faced with a demographics crisis. Now, this is why China has actually been forced to make a pivot and reverse two of their very crucial laws. Back in the 1980s, they had a one-child policy where if you were parents in China, you could only have one child. Well, recently they reversed that one. And then only a couple of years ago, they had a two-child policy. They said, okay, now you're allowed to have two children. Our demographics are pretty bad. You know, maybe we need a couple of more kids and youth in China. And guess what? They've also had to recently reverse that. And that is all because of their demographics crisis. And I believe this all sits upon the foundation of their crumbling real estate market. We can see that there is over 80 million empty homes in China, and they simply do not have the population growth to fill those homes. It's almost as if China's entire economy is built on a house of cards. Quite literally, it is a real estate house of cards. But where did this situation all begin to go wrong for China? Where did it start? I believe it started in 2021. The CCP, or the state media, actually came out and they said, look, houses should be for living, not speculation. And this actually triggered the beginnings of a collapse in China. Most people remember what happened to Evergrande a couple of years ago. It was all in the news, and that is because from this table we can see here, Evergrande is one of the largest property developers in China. Since Evergrande's crisis, their stock price is down over 90%. Okay, they have an absolute crisis. But have a look at number 2 on that list. Who is it? It is actually Country Garden Holdings. They're the second largest property developer in China. And now a couple of years after this Evergrande situation has grinded on, their second largest property developer is in an absolute crisis. They cannot meet their bond payments, okay? They're missing so many different bond payments. Recently, even a small 50 million one. And again, that sounds like a lot of money. a $50 million bond payment. It's not really chump change, but this company has over $200 billion of debt. So if they can't make very small payments under $1 billion in size, what is going to happen to the other $180 billion of loans and liabilities that this company has? I'll let you guys draw your own conclusions on that one, but we can see the market cap of both of these property giants has been in absolute free fall over the past couple of years since President Xi came out and made that announcement and said, look, houses are for living in, not speculation. This has essentially triggered the collapse in China. This recent crash in China is actually why the media has actually made a little bit of a pivot in China. We can see from this headline here, it says, China signals more support for real estate with a big change in their tone. So they want to actually start pumping up that real estate market again, because I think President Xi didn't quite anticipate just how bad the Chinese real estate collapse would be. Okay, again, let's remember $8.1 trillion in 1 month. That's 9% in 1 month. That's absolutely ridiculous. So we can see here, this is some official data coming out of China, and we can see that over the past year, house prices have been declining for the first time in many years, okay? And this isn't the only metric in China flashing a big code red right now. They've been publishing the youth unemployment data for only the past 5 or 6 years. I believe this began in 2018, and take a look at this. The youth unemployment rate has absolutely soared from below 15% in around 2020 to over 21% today. And guess what happened? China said, yeah, you know what? We're going to stop publishing this data. Youth unemployment just hit 21%. That is nearly as high as the unemployment rate in America in the Great Depression in the 1930s, mind you. And China just said, yeah, we're going to sweep that one under the rug and we're going to stop publishing these statistics. And this is very interesting. And this kind of helps to explain why there is such a big gambling culture in China, okay? I felt this, maybe it's Southeast Asia that has a very big gambling culture. In Australia, everybody gambles on all sorts of sports, whether it's the horses, the football, the rugby, the soccer. That's right, we call football soccer in Australia, but it looks like the same thing is true in China, and it looks as if this problem has only been escalating in the past couple of years. We can see here, lottery sales up by 50% in the first 5 months of 2023. So what's happening is you have youth unemployment at an all-time high, and the young ones are simply saying, look, the only way I can make money is by simply gambling. I'm going to go to the lottery. I'm going to buy some lottery tickets. And this is obviously very, very concerning, and just another sign of how bad things are in China. We transition a little bit into looking at their economy. We can see that China just released its worst economic data in decades, announcing that in Q1 2023, their GDP only grew by around 3%. And again, a lot of people will be saying, hang on a minute, 3% growth, that sounds pretty good. But let's remember, China has been accused of fudging their numbers for many years, and they've normally been telling people that they're actually getting around 5 to 6% GDP growth every single year. So again, a 3% is a whole lot less than the 5 and the 6% that the Chinese, leaders were telling us GDP growth was, okay? And we have to imagine if youth unemployment hit 21% officially, it was probably a lot worse, okay? A lot of people have speculated for a long time that China's data is, not to be trusted. Let's just leave it lightly. But let's start diving in what this potentially means for Bitcoin, because I think it's really strange that in the same month that China's real estate market collapsed by $8.1 trillion, the Chinese court system actually came out and they made a little bit of a pivot on their 2021 Bitcoin mining ban. They said that Bitcoin and quote unquote crypto is actually considered legal property. Now, again, that is really strange. And it's even more strange when we do start to consider all of these other things, like Beijing giving Hong Kong their blessing to become a quote unquote global crypto hub. And even more strange when we consider the fact that China is still the world's second largest Bitcoin miner, despite banning Bitcoin mining in 2021. So, is this crashing real estate market related to China's softening of their Bitcoin ban? Is China saying, look, you can move your wealth out of real estate and put it into Bitcoin? And that is exactly what we're going to be exploring together in tomorrow's video. But if you can't wait the 24 hours for that one, you can bring yourself up to speed on what I believe is China's Bitcoin backflip. We recorded a video on that one recently, and I will pop a link to that one right there. And with all that said, Hope you enjoyed this one. Let me know in the comments down below if you want me to do more real estate market content. Thinking about doing a few real estate bubble videos for you guys in the future. And with all that said, I will see you all in the next one.